Tyler Crow, I will tell you, buddy, Chargepoint stock has taken a pounding from the 2023 high. It's down about 56%.
Not
And
great, Bob.
not great, not great. But I can tell you there's a lot of people looking at the stock, and this is a stock that has just absolutely skyrocketed before. There's a lot of people asking, do I need to buy this dip because this is just going to skyrocket again? Do I need to buy it before that happens? I'm Jason Hall. This is The Smattering. I've got Tyler Kroll here. We're going to talk about Chargepoint, what sent the stock down, and whether or not this is the stock investors need to buy before it starts to go back up. Before we do that, we've got a great way for you to get 10 more great stock ideas. The Motley Fool sponsors our videos. We have a special link. Go to that link, fool.com/The Smattering. And the Fool is going to give you its 10 best stocks to buy right now. After this video, be sure to check out that link. All right, Tyler. So let's talk about what Chargepoint is.
Aside from a company that loses money, they are a company that makes charging stations for electric vehicles. The theory being is that, you build enough of these chargers, you can develop operating leverage where you're manufacturing enough to make money on what you're doing. But that is a pretty tall order when it comes to EV charging, because it's an extremely competitive space. There's at least 4 or 5 startup companies trying to do this. You have a company like Tesla, who has their own supercharger network. You have electric manufacturer suppliers, Schneider Electric, ABB, companies like that. They're making chargers too. It's an extremely competitive business, and one that, even though it is going to be a very high growth one, Chargepoint can capitalize on. If you're at an area with long waits, there's likely going to be a lot of EV charging stations at shopping malls, parking lots where basically you're expected to be there for a long time, your business, your office, if we actually go to offices anymore. You can see the potential for growth, or the total addressable market.
It's a massive addressable market. There's no doubt about that. It really is. But there's the one more piece to it, Tyler, that I want to make sure we mention to give Chargepoint some credit, because it's more than just the chargers themselves, but they're also providing services too. So you think about fleet management, which I think is a really important niche. That's not the kind of thing that like a Tesla is going after. So there are some opportunities for it in these areas where companies need help managing their fleet for charging, whether it's chargers and you want to make sure to charge people the right way, or you're a vehicle fleet operator and you want to manage the fleet charging. So there is some potential there. But let's talk about Chargepoint as a business. You kind of at the beginning that besides a business that loses money, and that's true, right? This is a company that has really struggled from even before it went public. It went public sometime in the past 5 or 6 years, and it's never been profitable. And let's talk about some of the key reasons why that's the case, and why you and I both want to caution investors out there that potentially think that this is going to be like a Tesla that lost money until it became immensely profitable. Why we both kind of think Chargepoint is going to struggle to move from that losing money phase to the making money phase.
I'm not going to wholly discount the idea that an unprofitable business can become a profitable one. We've seen it plenty of times. It's basically the natural cycle of how businesses happen. But among all those winners that make that transition, there's a lot that just don't make it. And part of the reason that this business itself doesn't necessarily look like the most attractive one is there's not a lot of pricing power involved in this. People don't go around and just be like, oh, I need to get my electricity from a Chargepoint EV charging station. It can be anyone's. It doesn't really matter as long as it's the plug that fits into what we do. Tesla at least has brand equity. People recognize the name. There's an association with that, and there's a familiarity with that. I don't think you're ever going to get there with EV charging networks. Does anybody care? As long as the parking spot is open and it has a charging station, I think that's kind of what matters here. So lack of pricing, extremely competitive environment, margins not that great. I mean, you're selling electricity. It's not exactly like, a premium product here. And so you kind of combine all those things together, and it does not look like the most attractive market to be in for long term. So I think with that in mind, you see a business that's growing revenues 80–90% year over year. It's starting to decelerate a little, but also margins and operating profit, those losses are accelerating. And so I don't really know what to do with that.
They just got to 1% GAAP gross margins this past quarter. That doesn't leave a lot of money left over to pay for your operations. Let's say they do scale up. And I want to make the case that this can be a profitable business because, again, I think modestly profitable is a reasonable expectation. But where are you starting from today? And Tyler, I'm going to make you cringe here, but I'm going to throw out a metric that you're not a big fan of, and that's the price to sales metric. And the reason I want to use it is because even at this price, so again, this is a stock that's down 55% from its high this year. It's down roughly 90% from its all-time high. Even with all of the discounting in the stock price, and as much as revenue has grown, it still trades for 3.7 times sales. And you don't typically see low margin businesses trade for a positive multiple. They usually trade for a discount to sales, right? 1 time sales or less. So there is a tremendous amount of growth. Even with the stock price falling so much, there is still a tremendous amount of growth baked into today's $2.1 billion market cap. So I think that's really important context to start with. I think there's a case that Chargepoint can be a perfectly fine business and can get to some level of profitability. All of the things you talked about are the reality. The core part of its business, the biggest part of its business, is going to be commodity driven. People stop at gas stations that are convenient to get to and that it's cheap to buy gas at, right? The only time they say, I want to go to Buc-ee's or I want to go to Sheetz or whatever your favorite convenience store brand, is not because of the gasoline. You go because they have the big gulp soda that you want, all of that other stuff. Guess what? Chargepoint sells gas, but they don't sell all the profitable things that convenience stores sell. Their value add, those services that they can provide, I think that's going to be a relatively niche business. It's not going to be that large that's going to earn a massive market cap multiple from today's price. Could the stock go up from here? Sure. We've already seen it happen. This could be a YOLO stock again, right, Tyler?
We're very much talking about the business of EV charging, but if you want to talk about the stock, I think both you and I will wholly admit we don't have the slightest clue what the stock itself will do, because you could just, I don't know, have a Reddit group get together and send this thing to the moon, baby.
But thinking as a stock investor, you're buying a part of a business, thinking about the quality of the business. I don't think that even at these prices, Chargepoint is the quality of business that I would want to risk my capital in. Because even if it succeeds, I don't think it's going to be a high quality, profitable business. And that's, for me, that's enough reason to say, let me go find something else that's higher quality and invest there. Maybe like an Enphase, another company that's in this space that's proven that they can make margins as a manufacturer of products that's tied to the EV industry, to the future of renewable energy. Maybe that's a better place to go. Check out our special link, fool.com/the smattering. The Fool is going to give you another 10 ideas too. Be sure and check that out.